In less than 24 hours, the Fed could flip the script on global markets. Rate cuts are widely expected, but with political pressure mounting and markets already priced for guidance, this meeting might set the tone for whether crypto crashes or explodes. JP Morgan's history shows cuts near record highs often lead to strong 12-month gains. But Moody's now warns of a nearly 50% recession probability, the highest since 2020. So which side wins this time? The rally? Or the crash? Here's the reality. When the Fed cuts rates while markets are already near record highs, the average 12-month return for the S&P 500 is around 15%. That's huge for traditional markets, and in crypto it can translate to even more extreme upside. We've seen it before. When liquidity floods in, Bitcoin doesn't just rise by 15%. It can move 50%, 100%, or more in a short span. But here's the risk: the economy right now isn't as healthy as in previous cycles. Consumer debt is piling up, credit card delinquencies are at their worst levels since 2008, and Moody's is flashing that recession probability at nearly 50%. This is the highest outside of an actual downturn. That means the Fed is walking a tightrope. Cut too little, and the economy keeps weakening. Cut too much, and inflation could come roaring back. For crypto investors, that uncertainty is gasoline. Because volatility is the one guarantee when markets don't know how to price risk. So let's ask the question: is this Fed meeting the launchpad for Bitcoin and Ethereum, or the trapdoor that shakes out the weak hands before the real rally? Tom Lee, one of Wall Street's most bullish analysts, still insists we're mid-cycle. He believes AI-driven productivity, innovation, and cheaper borrowing costs will fuel growth for years. That's a massive green light for risk assets like crypto. But look at the cracks: housing markets are wobbling, white-collar layoffs are rising, and retail is being squeezed harder than ever. Even though the top 1% are still spending, the middle class is increasingly relying on buy now, pay later loans, even for groceries. That's not sustainable. Gold and silver just ripped to new all-time highs. Historically, that's a signal investors are hedging against dollar weakness. And when gold and silver explode, crypto often follows, but with more velocity. Ethereum, for example, has already shown that after FOMC meetings, it can post 40% to 100% rallies in weeks. Analysts are calling for $5,500 ETH in the medium term, with some long-term targets as high as $10,000 if ETF inflows accelerate. And speaking of ETFs, BlackRock just bought $260 million worth of Bitcoin and another $360 million worth of ETH. That's not retail hype, that's institutional conviction. But timing is everything. If history repeats, Bitcoin could dump first, down to critical levels like 104K or even 92K, before ripping higher. Imagine the panic if that happens. Retail sells, institutions scoop up the dip, and the rally begins without them. That's how markets transfer wealth. This is why the Fed's press conference matters just as much as the rate cut itself. It's not just the number, it's Powell's tone, his guidance, and whether he signals more cuts ahead. If Powell leans dovish, the market could ignite immediately. If he's cautious, expect turbulence first. Meanwhile, DeFi and tokenized assets are already heating up. Uniswap's L2 volumes are near yearly highs, and tokenized stocks on Ethereum are exploding in activity. This is the quiet buildup most people miss, until the breakout is obvious. Crypto thrives in these transitions. Volatility plus new narratives equals parabolic moves. The Fed's decision is just the spark. So here's the takeaway: this isn't just about whether rates go down tonight. It's about who controls the next phase of this market, retail or institutions. If the Fed opens the liquidity gates, Bitcoin, Ethereum, and even altcoins could see explosive upside into 2026. But if Powell plays it safe, the path might include a sharp pullback before the rally truly begins. Either way, the setup is too big to ignore. This is the kind of moment that decides cycles. Now it's your turn. Do you think the Fed sparks a crash first, or does this become the start of the bull run we've all been waiting for? Let me know in the comments. Smash that like button if you want daily breakdowns of these critical moves, and subscribe so you don't miss what happens next. Because whatever the Fed decides tonight, crypto will react, and fortunes will be made or lost.